Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 15th, 2025, and we're diving into Hancock Whitney's latest earnings report for the second quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Hancock Whitney's performance this quarter.
Revenue and profitability overview. Let's start with the top line. Hancock Whitney reported a net income of $113.5 million for Q2 2025. The adjusted earnings per share came in at $1.37, slightly below the forecasted $1.34. John, can you elaborate on these figures?
Absolutely. The net income reflects a solid performance, although slightly down from the previous quarter. The adjusted EPS of $1.37, while below the forecast, indicates a stable earnings environment. The net interest income increased to $279.5 million, showing a 2% rise from the previous quarter, which is a positive sign. Additionally, the efficiency ratio improved to 54.91%, highlighting better cost management.
Operational efficiencies and future outlook. Hancock Whitney has shown some interesting operational metrics this quarter. Loans increased by $363.6 million, while deposits decreased by $148.1 million. The net interest margin also saw an uptick. What does this mean for the company's future outlook?
The loan growth is a positive indicator, suggesting increased demand and effective deployment of capital. However, the decrease in deposits could be a concern if it continues. The net interest margin improved to 3.9%, which is encouraging as it reflects better interest income relative to interest expenses. The CET1 ratio, although slightly down, remains strong at 14.03%, indicating robust capital adequacy.
Asset quality and risk management. Asset quality is always a critical area to watch. Hancock Whitney's allowance for credit losses coverage is at 1.45%, with non-accrual loans totaling $94.9 million. How does this reflect on their risk management strategies?
The ACL coverage of 1.45% is solid, showing that the company is well prepared for potential loan losses. The decrease in non-accrual loans and criticized loans indicates improved credit quality. However, net charge-offs increased to $17.8 million, which is something to monitor closely. Overall, their risk management appears to be effective, but vigilance is necessary.
CEO's perspective and strategic initiatives. John M. Hairston, the CEO, mentioned the successful acquisition of Sable Trust Company and a share buyback of 750,000 shares. How do these strategic moves align with Hancock Whitney's growth plan?
The acquisition of Sable Trust Company is a strategic move to enhance their wealth management capabilities. The share buyback indicates confidence in the company's valuation and a commitment to returning value to shareholders. These initiatives align well with their growth plan, focusing on profitability and efficiency, as highlighted by the CEO.
Key takeaways. In summary, Hancock Whitney has delivered a stable performance in Q2 2025 with a net income of $113.5 million and an adjusted EPS of $1.37. The company continues to focus on loan growth and operational efficiency. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Hancock Whitney's performance.
Thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hancock Whitney's performance in the comments below.